So we had the markets crashed, right? Fell 10%, notably tech stocks, which fell 10% in 3 days. And we'll see a little bit of rebound. But I know many of you own some of these stocks, and they're down. I just mentioned at the beginning of this podcast, in the opening, a lot of it down 30% plus from their highs. Now, over the past 18 months, I've been telling you to use a strategy that helps you hedge your portfolio to where your losses in your portfolio would be minimized if the stock market falls like it did, and to where these hedges could actually result in you making an absolute fortune. And what strategy am I talking about? Buying puts, specifically long-dated puts. It's not difficult to do. Don't get scared of an option strategy and say, I'm never going to try. It's very, very simple. So buying puts is an option strategy. It gives you the right to sell a stock at a certain price at a certain time. You're basically selling it first and buying it back later. It's a way to almost short stocks, but you're betting against stocks where your risk is limited to the amount you put into that trade. That's unlike shorting a stock where your risk is unlimited. A stock like Tesla, Zoom, Overstock can pop hundreds of % in months, probably resulting in your wife kicking you out of the house, that house that she now has to sell, and you maybe buy a refrigerator box to live in because you're completely broke. It's how dangerous it is. Now, when you're looking at puts, we want to talk about long-dated puts, which go out for 12 months. And the longer the time frame, the more expensive they are. It's options. But I explain how you should be using this strategy to hedge your portfolio. What does that mean? Well, most of you, mom-and-pop investors, common investors, individual investors, are long stocks. Most of them are long stocks. Long stocks only. So say if you keep 90% of your portfolio long. Say if you have a Curzio Research Advisory newsletter, and you buy all the positions, and I'm going to use this number. Some of you have 1,000, some of you have 10,000. Let's say if it's a $100,000 portfolio, you have 90,000 in these positions that you long. Just say that's the only thing you own. You don't own a 401k, you get 100 grand. Just say it. Make numbers easy. Now you take 10% of it and you buy long dated puts on sectors, on the S&P 500, even individual stocks, where a 25% decline, which we saw in a lot of companies in a 3-day span, could result in 10x profits in months on these positions. Right? You're looking at a 3-day crash here, 3-day pullback, and it's a crash. It's the can't say a NASDAQ crash, it's corrected, but these stocks have crashed. A lot of them down 25% plus, 30% plus. A lot of names. So what happens when you see a decline like that? Well, your long portfolio is going to get hit, right? It's going to be down since the markets are pulling back, but you're going to start generating lots of money from your put positions, which if you hit a good one, like just where the stock falls 50 to 60%, that one position could be worth the entire 90% of your long portfolio. That's called hedging. Now, say if you started buying puts in April, what happened? Remember, these are 1-year puts. The market surged, right? Those March, those April, just kept going higher and higher and higher. And most of these out of the money for now. And let's say you lose all of your money on every one of these positions, right? Every one of these positions. So 10% of your portfolio you lose. So, wow, Frank, that's a lot. That's every single position. Say if you bought 7 or 8 different positions, right? Different stock sectors that you think are going to go down. And you lost your money in all of them. Well, since April, the market, right, the S&P 500 surged over 50%. That includes this week's sell-off. So chances are your long portfolio is up huge, easily, making up the difference and then some. Okay, this is how you hedge your portfolio. And with this strategy, with buying puts, you only lose the amount of money you put into the trade, so your risk is limited. And of course, it's not likely you're going to lose 100% of your money in every put you buy, but I wanted to throw in the worst case scenario to help you understand the power of hedging. And it's not some bullshit strategy that I would never use a Curzio Research to help our subscribers. In fact, I created Money Flow Trader, a newsletter, whose main focus is buying puts. And this product is run by Ginny Terranova, amazing analyst. It's so much positive. Send me something negative about Ginny already. But just a hard worker. I mean, someone that, even when she admits her mistakes, tells you what to do, just, really proud. It's really, really cool watching her. She's just an amazing analyst. But she also has long trades in that portfolio as well, which is a good thing considering the market surged since April. So she bought some call options on gold and silver and made some nice gains, while a lot of her other positions were down because the market kept going higher and higher. But this product I created for you is because I care about my subscribers, because I care about my investors, because the markets don't always go up and up and up. Over long term, you could say they do. But sometimes you get names that get destroyed. And the professionals, the experts, this is how they invest. They don't put everything long and say, go, 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 go. Some of them do. But this is a product. This is something that will help you become a better investor. I'm not selling a product here. Learn about buying puts. Strategy, again, most pros use. And the best part of all, it's easy. It's very, very easy to do. Don't get intimidated. Oh, it's options. Buy puts. How do you do? You could do your E-Trade, Fidelity account, and Money Flow Trader with Ginny. She tells you exactly how to place to trade, leaving almost no work for her subscribers. Just do the trade, put it in your E-Trade, you're good. She explains everything on how to do it. But get familiar with this strategy, because we're in a market that when it comes down, I mean, it comes down in days. And you have everyone out there nervous, selling. And you're going to go to parties. Everyone's going to talk about how much money they lost when you could be making a killing simply because you were smart. You hedged your portfolio. Because in this market, it's a perfect strategy. Since the credit crisis, you can last 10 years. Our pullbacks are quick and violent. Write a chart on this. Again, I'm not telling you that you want to go to my free sites, Twitter at Frank Curzio or Curzio Research YouTube page. And I put up a video, put a chart up there showing you the declines, those 10% declines. They all happen within 45 days. There's like 7 or 8 of them, I think, over the past 10 years. It's going to continue to happen. It's going to happen often. But you have those violent, quick pullbacks. It's not like a long, drawn-out, the recession from 2000 to 2003. In the middle of there was an actual recession. But, that period was terrible. The credit crisis took about 18 months for the market to finally hit its lows from its 2007 peak. So it was March 19 lows. But, it's different now. It's a different market with algorithm. People run to the exits immediately, scare the shit out of you. You have 10, 12, 50% pullbacks happen violently. You're going to happen often. That's why this strategy works. Remember, you have a year. You have a year. And if you're wrong on every one of those positions, chances are your long portfolio is going to go higher. But say if you're right on a couple, and you're really right on 1 or 2 of these things that Ginny has recommended in Money Flow Trader, man, and you will make an absolute killing. And it's not often you're seeing people out there, newsletters, whatever, logging in 500% gains, 200% gains, 175% gains. And these are some of the gains we've seen over the last 6 months. Huge, huge, huge gains. And you're risking and you're losing, some of the other ones that you're putting your money into when the market goes higher. But again, the rest of your portfolio should be doing fine. And when you use this as a hedging strategy, you don't just want to purchase Money Flow Trader and say, okay, this is the only thing I'm doing. No, it's a hedge against everything else you own. And you could win both ways. If the market stays flat and you're betting against a certain sector of stock and this thing goes down tremendously, now your long portfolio is going to be okay and you're going to make a lot of money off it. So when it's risk reward, when you look at risk reward, this is such a fantastic strategy that I'm hoping most of you are going to look at. And Money Flow Trader subscribers are getting so much good positive feedback. If you're interested in learning more about that product, go to our website, thecurzioresearch.com. Again, you don't have to buy it. It is an expensive product. It's one of our high-end products. But almost everyone that has subscribed since Ginny has been there has stayed on board, is probably loving the product right now because she also had some big winners on the long side with gold and silver. And now you're seeing a market that's really, really crazy, and it's going to remain crazy. We're going to see these violent pullbacks, lots of liquidity in the market. It's just a perfect product to hedge your portfolio and let you sleep at night. So again, Money Flow Trader, interested, go to our CurzioResearch.com website.